Morning, everybody. It is 8:15 a.m. It is November 10th. It is Friday. Hope everybody's having a good week. Finally got some selling pressure in the markets yesterday. Much needed selling pressure. Doesn't matter the catalyst. Went up too quick. We went up too quick, and we're hitting around these key levels and just couldn't break through. And all you needed was a little Powell, a little bond auction to balance out this buying that's been going on. Okay. Now, consider this, okay, if selling just came through, we went through some big levels here. I'm going to go through that in a little bit. If this holds, right, what you just did is remove selling. What you did is just remove sellers from the market. Okay. That's how liquidation breaks work and stuff like that. Usually they come quick, they do their job, and what happens is when they happen, it removes sellers from the market, right? So right now we came down to key levels. Sellers got paid yesterday, right? But now what's going to happen? What's going to happen now? If this is short-lived, right? You need some fuel to make that move higher. The market told us it couldn't go higher from those resistance levels, right? Well, now you got selling, and now this selling is short-lived. All the shorts will have to cover, and that could fuel the move higher. So we just have to see. Okay, we just have to see. So without further ado, welcome to my channel. My name is Steven Gonzalez. Use volume profile, market profile to find structure in the market. Structure played beautifully on the chart yesterday. I'm going to show you guys that perfectly structure-wise. All levels matched up from the selling yesterday. So also use gamma exposure levels and also use supply and demand, right? Along with the most traded price of the month, the week, and the previous day. Okay. Subscribe and set an alert if you haven't already. Okay. And if you like the content, please give me a big thumbs up. You can also follow me on X, on social media. All right. Let's get right into the futures. Let's see what's going on here. I know Bitcoin's making a pretty nice move. All right, we got Ether leading the pack, up 2.21%. Bitcoin almost at that 38K. Okay, it's up 1.86. Crude been beaten down as of late. Okay, been beaten down. Up 1.15% today, $76 a barrel. 30-year bonds now. See, this is such a mixed message in this market, in the bond market, right? 30-year bonds are being bought this morning. That should send the 10-year yield a little lower. So it's really a little battle in the bond market. Russell's up 0.38. The Dow's up 0.32. ES is up 0.31. The NASDAQ is up 0.20. Okay, 10-year yield reports at 8:20, which is in about a minute. That should be lowered. Okay, that should probably be lowered with the bonds being bought. The dollar is down slightly. The gold is taking a little bit of a break here. Couldn't break 2K for that long. Down almost 1%. All right, silver's down. It's a more volatile metal, down 1.27. All right, the VIX is also down to 15. Okay, down 1.7%. Obviously, that probably rose pretty nicely on yesterday's sell-off. Okay, let's move on. Stocks I like to swing and day trade. Okay, coin is up 2.77%. Is at 95. Okay, obviously going to get love from Bitcoin. Nvidia is up 0.83. AMD's up 0.63. Okay, BA's up 0.62. Let's go some laggards. Tesla's been getting beaten down. Meta's down 0.44. Baba bunch of China stocks were down. So Bob is down 0.53. Okay. Netflix just got a price target raise. Okay, to 510. And the strike was ended. So let's see. That should help out the Disney and Netflix, but we'll have to see, right? All right, top sector stocks. Okay. So energy's been getting beaten down as of late. And with crude, you got Exxon and Chevron leading the pack, up 0.96, 0.82. All right, followed by Qualcomm. Okay. I just saw Taiwan Semiconductor had a very nice October. Might probably be giving some love to semis. All right. Now, who's the laggard here? Pretty interesting. UPS. UPS is down 1% today, down to 138. Okay. That's industrials. So let's go move over to sectors. Okay. Leader, energy, up 0.97, followed by semis, up 0.95, followed by technologies, up 0.28, followed by healthcare, right? There is no sector that is negative this morning. Okay. And as far as the strongest index this morning is the Russell. The Russell's been beat down really bad. It is up. Okay. And TLT is up 0.82 today. All right, that's I said a 10-year yield I was talking about. It's at 4.57. It's almost down 1%. Just go back to that. You can see here, 10-year yield down 0.93. Okay, this is a battle. It's a battle right now. Really, 4.4. You go below it to 4. You're probably going to get a nice rally in the market. Okay. All right. Let's go over to some news. I mean, I'm not going to harp on too much news. Kind of most people know what happened. All right. Let's go to some market news here. I'm just going to briefly cover it. All right. So Fed Powell kind of basically was a little hawkish. Okay. That's what sent markets, and the bond auction at 1 p.m. also helped. Meta strikes deal with Tencent. Casino operator Wynn Resorts label deal with the Las Vegas unions. GM China JV to recall 1.3 million Buick, Chevrolets, Cadillacs over safety risk. All right, those was some news that's going on here. Apple had to pay 25 million to settle claims by the U.S. Department of Justice. Let's see here, what else? Just now, Walt Disney, the company, delayed the release of Marvel movie Blade and a new Deadpool installment and several other films on Thursday as Hollywood studios adjusted schedules following the end of the fourth-month actor strike. The next Deadpool, which has been scheduled to reach theaters in May, will now debut in late July. Okay, so there's the Netflix. Also, J.P. Morgan raises the target price to reflect the company's ability to accelerate revenue growth in 2024, helped by ad-supported tier and page sharing features. Okay, it looks like they cut Warner Brother Discovery from 17 to 15. Okay, now as far as economic calendar today, don't initiate trades at 10 a.m. You got Michigan consumer sentiment coming out with a bunch of these numbers, all dropping at 10 a.m. I would stay away from entering a trade at 10 a.m. It'd be very volatile for those like 5 minutes or so. I wouldn't enter a trade there. Okay. Now Fed Logan was speaking this morning. Fed Bostic's supposed to speak at 9. Okay. So Powell was just talking yesterday, and some of the things he was saying, like Fed Powell's, the Fed is in the range of restrictive policy. Question of whether the neutral rate has risen less interesting. The Fed is still trying to judge if it needs to do more. Then we will consider how long to keep rates high. So market didn't like that. All right, that's kind of what's going. It looks like it looks like a bunch of airlines have gotten downgrades. So if we look at downgrades here, American Airlines, I think JetBlue, Southwest Air, all have gotten downgrades. So not looking good for the airlines transports wise. Okay. Okay. I think we can move on from the news. Let's go into some daily charts. And we'll just see where we're at here. Okay. All right. So, as you can see, we have the zoomed out picture here. Now you see there's a downtrend line. There's two of them. There's a main downtrend and a secondary downtrend. Okay. So what did we do yesterday with those? So we hit the secondary trend line, and the 100-day moving average is right above it at 439. Okay, you can see this was last month's highs. Okay, that's why important level. I've talked about it all week. 438, 439. I said that's key level in the SPY, right? So basically, we hit our head against this last month's highs multiple times. This orange line right here is last week's highs. So we're underneath last week's highs. Okay, we're pretty much in between the 100-day moving average and the 50-day moving average. Okay, that's kind of where we're at, right? And where did we come down to? The low, basically. Basically, you got 50-day moving average support, and you have basically the low right here, right? You took out 3 days of buying, which is fine, but you held here. So now the market has to decide what it wants to do, right? Is this going to be the day we got some selling now to fuel the move higher? Don't know. Right now we're at 435. Okay, so we're right here. We're at the lower third of yesterday's session. Okay, that's where we're at with the SPY. Okay, let's look at the Qs. Okay, we broke this main downtrend line. You can see it right here. We broke it, right? Now notice the SPY was closed below last week's highs. The Qs is stronger and did not. It didn't even hit last week's highs. Okay, so it hit its head against last month's highs right here. You can see last month's highs, right? Hit it once, twice, broke through it yesterday. I was actually long and got this move up here. And then I knew enough to take off all my profits at the top. I didn't trust it, so that was a good trade. And then I was done for the day, and then I had to go to work. So like I know that late in the day it sold off, right, because of Powell and because of the bond auction. So basically you looked above and you failed, and you came right back to here. So structure wise, everything's intact. Nothing really to see here. You just finally got some selling. Okay, where are we now? 370.80, 370.80 right here. We're at the lower third of yesterday's range. Okay, so remember, we're still holding last week's highs. Structure wise, this isn't nothing to panic about. Okay, now we're above the 100-day moving average. We're above the 50-day moving average. So Qs are definitely the stronger index. Okay, one thing to note, let's look at the Dow. The Dow does have a possible death cross happening here. See, there's the 50, there's the 200-day. The 50 is declining, and it's almost meeting, right? So if we get another day of selling, you're going to get a death cross in the Dow. Just something to note. Just something to note, right? You've already had that death cross happen in the Russell right here. That 50-day crossed the 200-day. The Russell is just being beaten down, okay? So that's what's going on there. Let's move on to some triple-headed monster here. Let's go to that bond market here. 10-year yield. Let's see what we have going here. Okay, so we're just in a range here. Okay, dropped off. Like I said, this 4.4 yield is support. So you break 4.4, you're going to go down to probably 4.3. But we're holding here, right? This was yesterday. Look at that. The yield rose. Now it's back down. Really, this is the bond market's going to, the smart money. Remember, if this starts to rise, that puts pressure on stocks, right? If the yields go down, stocks can go higher. Now let's see the VIX pop from yesterday. So you got a little pop, boom, right up to 15, but it's kind of relaxed a little bit today, down to 15. You need to get back into this 16 area, 17 area in order to start getting some fear in this market. All right, the dollar's right here. Okay, you got a lot of whip. Dollar just puts so much wicks, right? But basically, this area is 105.32 to 106.74, and we're in the middle. The dollar's in the middle of the muddle. Okay, so dollar's just hanging out in the middle there. That kind of does it for these charts. All right, now we can get into you know what I'm going to get into just an hourly chart, and just to show you some structure in futures. Okay, so let me do that. I'm going to show you what I see here, just structure wise, and why it just, you know, makes a lot of sense. Okay. All right. So let's zoom in here. Okay, let's zoom in here. Okay, this is the ES. All right, so we see there was a supply zone right here that just got breached, so I'm going to remove that. So that's gone. Okay. So this is the move, right? We made a big move up. Didn't have really tons of selling, right? Now you can see on my chart the most traded price of the week and of the month. Let me get my trusty pen up here. Is right here, right? Big key level. That is around 4,400. Okay. And if you look at how the market's been going, right? Look what happened. Moved up, right? Moved up, and look at this just hitting its head and really tried to break out and then just couldn't, right? Right in this area. So when you leave this area of ultimate balance, you're going to get a big move, and that's what you got. You got this big move, right? Got the big move. Now, what I have on my chart here is a Fibonacci, right? Fibonacci retracement, right? So from this big move up, we went all the way up to here, right? And where do we go? We went right down. Here's the 50% Fibonacci right here, around 43.70. We came down to the 61.8, which is 43.59. This line right here, and we're holding it, right? We're holding it. Now, what do we have below here? This is why this is perfect for this, the structure that I follow, right? This right here is the gap. This is a gap. That's a gap. We came down into it, right? And only like filled it very slightly. Okay. So you can see the structure. Big move, right? Came down, retraced almost to 61.8, but couldn't fill this gap. This gap is still here. And now look what the market's doing, right? Came up, came down, made a demand zone right at the gap, the top of the gap. And now this move down could be in trouble to fuel this move higher. Okay? Now, take it one step further. All right, you can put a volume profile on this move, and we can just see where the volume's been. Okay? So you can see lots of volume here, lots of volume here, right? So you got two big high volume nodes, right? So, and look what the market's doing, right? Right from here, you got this thin little volume, and you can see it's just been holding this level here. This just cleared out a bunch of longs. This move cleared all those out, right? So like I said, very important that when you get a move like this from a lot of trading balance, right? And then you're going to start to move back up, you're removing sellers from the market. Sellers, okay, they need to break this here, fill this gap, start making new volume to go lower. What's happening now is this was more or less a liquidation break, and it's going to give us the fuel. This is not good structure here to push back up and test these levels again. Now it could act as resistance here and roll over. Could, but it pretty much probably tests this area again, and then if it holds it, it could go higher. Okay, that's just structure. All I'm talking about is structure. I don't care about the news, what happened. That's how the market works. Okay, that's how it works. This does not mean sellers are in control. That move does not mean that. Okay, so that is the ES. Okay, let's look at the NASDAQ together. Okay, and the NASDAQ has different structure. Okay, the NASDAQ has a different structure. Okay, so remember, the ES came from the most traded price of the month and the week being equal at 4,400. Right? Well, the NASDAQ does not have that same structure. Okay, so what the NASDAQ has is, you see the big move. So I have a Fibonacci on the NASDAQ, right? So from this area, we moved up all the way up until yesterday, up right here. Okay, so notice what the NASDAQ did. 50% Fibonacci of this move is, let's say, 152. It's right here. Okay, so the NASDAQ did not even take back half of this move. Okay, that's usually when you ever make big moves, the midpoint or the 50% Fibonacci is going to be a key level to defend. Well, it didn't hit it, but it pretty much defended it. Okay, what else do you have? You have this main downtrend line that was broken right here. Well, the back side of it has been support, right? So that's why I keep that on my chart. Okay, now you also have, there's a lot of levels here. The most traded price of the year is right here, 153.73. That's the most traded price of this year and of the rolling year. So look how we were just around this level, right? This right here used to be the most traded price of the year. So you're just at a very active area for the year. It's such a crucial level. Okay, very, very crucial level in the NASDAQ. So that's why I'm just showing you guys these structures, because it's really at crucial levels in the NASDAQ. You got these big volume, most traded price of the year here. This was the most traded price of the year. That's just how much the market's been trading in this area. Okay, it's not an easy area to push through. Okay, so in this scenario, you have the most traded price is down here at 152. The most traded price of the week is up here, which just happens to be the most traded price of the year. It's just this, you got this big high volume nodes that we're bouncing in between. Okay, because that's how the market works. Okay, now if we throw a profile from this move, just like I did earlier, you can see where the high volumes are, right? Look how much volume is traded here. Huge amount of volume. Huge. Okay? And then where's the other high volume node? Well, right here. So you got a ping pong going on in the NASDAQ. Okay? Now look what happens. You make a move up, right? All this volume's transacted. You finally make a move and you fail. Okay, so remember, this is the most traded price of the last week. So as soon as you cut through this right here, you're going to get that big move down. And where do you go? To the next high volume node right here, right? The most traded price of the month. And now, then look what the NASDAQ is doing. Okay? That's why price action can fool a lot of people. Okay? It can fool a lot of people. So look what that market's doing now. Okay? Here's the liquidation break. Came down to a key level, 50% Fibonacci, the backside of a trend line, right? The most traded price of the month. And look what is happening. Came up, came down, couldn't go lower, and now where is it going? Higher, right? These sellers will take profit, and if they're holding it and it starts to push, you're going to see them cover their positions, and we're probably going to test this area again. And then it's time for the market to either hold it and go higher, or it could reject here and go back and test this area again. Okay? Hoping this all makes sense to everybody. So forget about the news, forget about what dropped, forget about that, right? Structure's intact. The structure's intact. That's why I like looking at structure. Okay? Now, we can go back, we can go look at now to intraday and look at the market profile and see if there's any nuances that we're going to see, right? Let's see if there's any nuances. There always is, but I pretty much laid out what could happen. But we'll just look at the market profile, volume profile, to just see, okay, to see where we're at. And this gets down a little more granular than when I was just speaking, okay? So let's look at it. All right, let's look at our structure together of this market, right? So we have a profile. That's that little bit of excess. Distribution here, and then we have a little bit of excess, right? There's the gap I said that held. Okay. So, most traded price of the week and the month right here, 4,400. That's a big, big level. That's the line in the sand. I spoke about that earlier. You tried multiple times and failed to hold over it. And then you just had, longs had to liquidate. Okay. They had to liquidate the position finally, and now the market has reset itself. So here's the high from yesterday, here's the low. Okay, here's the overnight low and the gap. Very, very key area. Also, you have monthly VWAP right here at 43.44. Okay, so right off the bat, what do we have here? This is a weak low now. It's a top of a gap, it's an overnight low and yesterday's low. Very susceptible to being broken if we come back and test it. Okay, that's one thing I'm noticing. Okay, now the market's pushing higher as we speak, right? You can see it's pushing up. 50% of yesterday's 43.83 right here. That's the 50% of yesterday's move. Okay, that's the first line of defense. Now the market opened here, and you have equal longs to equal shorts, so you don't have much of an edge there. Okay, you don't have much of an edge. So now this makes it a little more difficult when we open up, right? Because now we're going to go back to the midpoint of yesterday's range, and it's kind of hard. Now you have to see, but we have our areas, which is pretty nice. It's pretty nicely laid out to see what the market does. Okay, so very, very easy today. Very simple. That's what I like about it. So let's look at scenario. All right. Now we're pushing up into the midpoint of yesterday, but we have clear areas to do business, right? So if you think the market's going to rally, what I would personally like to see is, okay, rally up to here, maybe get some selling, come back down into this demand zone and into the week low. Now this, for a bullish scenario, I'm gonna give you the bullish side of it. So we could come down, touch this week low, even do a little flush and recover. Don't fill the gap. Now you're making higher lows. This could fuel us back to 4,400. I don't know if the whole move happens today, but then you would need to hold above and find acceptance above that level, and then you can move higher. Okay, so that is something that I would like to see. Okay, now conversely, right, two signs for me to see a strong bearish case, right? So we'll go with number one here. You can push up, start getting some rejection here, come down. Now what you need to see the market do is break that demand zone and start to hold under it. And now you're in this gap. You need to find acceptance. The market needs to find acceptance lower in order for it to fill that gap and go lower, okay, into this demand zone. Okay, there's not a lot here. You have another gap down here, right? Ultimate weakness, you go down to this naked VPOC here, around 43, probably 18. Okay, but you need to take out this and hold in here in order to fill the gap. And you also have monthly view up here, but this is the bear scenario, right? That's one scenario, right? Then another one would be you do push up into this big level again, 4,400. You have supply in here. It's just a big level, right? And if you can't hold it and you whip back down and you start to go down, that's also could fuel the move lower. Okay. Now, let's look at the NASDAQ together. Let's look at our structure, right? All right, so we have double distribution here. No surprise. Remember I said the most traded price of the weeks up here, the most traded price of the months down here, right? You got that double distribution profile. Okay, that's the ping pong that we're going to probably go in between. Okay. All right, so let's look at the next part. We're holding, right? Market's holding the most traded price of the month. That's expected, right? It's a big level. Okay. And now 50% Fibonacci of yesterday's 15345 right here. Okay. So again, you just have two big levels to go off of. Okay, you got yesterday's high up here, yesterday's low. Okay, now you can see the NASDAQ breached, went down a little farther in the overnight and made an overnight right here low, which this is weak as well because you have the most traded price of the month here. And you have a demand zone here. So that's going to be, you have to take this out in order for the sellers to have any kind of ground to stand on. Okay, you see the market is still pushing, right? So inventory is pretty much balanced, right? Now this could set up, because today's a holiday, this could set up as well. There's always door number 3 is this balance, right? We could just do this, and we do this today. You don't always break out, right? That very well could happen. Okay, but let's talk about you know what I'm seeing here. So same stuff. I'd say the same stuff. All right. If you're bullish, right, you want to see a move up, maybe come back down, get people nervous, right? Come back down, test this area. If it holds again, then you can start to move back up into this level here and see if possibly you can test yesterday's highs. Okay. And the same scenario as the ES basically. So if the market comes up, comes down here with volume and it's very weak, you need to break through this big level and hold, 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 and then you could possibly make a move lower, right? 50-day moving averages here. You got monthly VWAP right there, right here actually, and you can go down and maybe go down to this gap. That's if you're really weak. Okay. Now, again, you could do the ping pong, and you could come up. Price could come up right into here. Supply, this big supply that's been really holding, and go under this level, and then you can come back down and test this. That's really what the market's going to do today. It's going to push out to here, push down to here, and either going to make people believe that we're going to fall or make people believe we're going to break out, and then it does the opposite, right? And also, door number 3 is always just we stay in between these two big levels, and you might even end up in the middle somewhere here by the end of the day. Remember, it's Friday. Remember, it's a holiday. Okay? All right, everybody. So that looks like it's going to be it for me. Hope everybody enjoyed that content. Subscribe, set an alert if you can. You could always could always give me a thumbs up. That would be much appreciated. And you can always follow me on X at Gonzo719. Okay. Now we got our plan. The key now is patience. That's the key. Patience, right? So that big selling right now is like we're almost back into the middle of yesterday's range, right? So, oh my God, we sold. That's just price action. Doesn't matter why. And now look, we're like back into the middle of yesterday. So, like I said, this gets tricky now because you're in the middle. You need to touch one of these extremes in order to get to actually see what the market's going to do. Okay? So I wish everybody good luck today. Stay green and enjoy the weekend, and I'll be back on Monday.